even maybe have one investment account where I have both of my crypto and my stocks in
Yes.
one place so I can get
Yes.
margin on both at the same time. And if I don't like the margin in that particular platform, I'll go shop it around on DeFi or wherever the hell I want.
My thesis is that that's going to grow to like 10 to 15% of the RWA market in the coming years. I'm curious, like, do you agree with that? Do you think that's right or wrong?
Are you working on sort of the bridges from kind of the native chain to some of these other chains where DeFi exists? Are you working on some of those integrations?
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
First time for Ian on the show. I'm good friends with Tom, who's a longtime BD growth guy over there. Met him in London a couple times and have had some good times. And then actually met Nathan here in Hawaii in December for a little party at Nick's house. So this is my first time meeting Ian. Ian, welcome to the show.
To be here.
And it's good to have you.
Thanks so much for having me.
Yeah, man.
It's good to meet you, Ian.
Rob and I were just kind of chatting about these, Stripe L1 announcements, Circle's ARC L1 announcements. You got Plasma and Stable button heads with them. We've got like somewhere in between, like stablecoin chains aren't valuable to like stablecoin chains are the future of finance, where crypto Twitter is versus the institutions are.
All right.
What was your honest reaction to these two announcements? Did it catch you off guard? What was your take? Why are these companies building these stablecoin chains? I just like to get like a more broad, holistic view, and then we'll dive into some of the Ondo specifics.
Yeah, no, 100%. I mean, did I fully anticipate so many TradFis to launch their own L1? Maybe not entirely, but it doesn't really surprise me. I feel like a lot of the mindset of a lot of these companies still is that they prefer at least some semblance of control over the environment that they want to build, right? And I agree with a lot of crypto Twitter out there of like, do you truly need another L1? It really depends, right, on what it is that you're trying to accomplish with that particular L1. How permissionless is it going to be? Are you creating it for censorship resistance in the first place? Or are you just looking for a 24/7 Rails that you can plug into TradFi in a way that you think is very helpful? And it kind of runs the spectrum a little bit. I don't expect the big TradFi L1s to be the most permissionless chains, but that's fine, right? The concept of these private TradFi chains or semi-private TradFi chains has been around for a while, and a lot of people hate on them for good reason, because historically not a lot of people have really used these things. But I think what a lot of people forget is that the TradFi rails right now just aren't very good. And if you can build a private chain or semi-private chain that at least helps you bridge or hook into TradFi in select ways, so that if you can then at least have 24/7 movement of some value and then go to the true public chains, that works. That's fine. That's a helpful product. But it's a spectrum, and a lot of people don't judge it on a spectrum. Whereas I think the reality is, at least for some of these TradFis, having a chain that is not fully permissionless, but at least helps them improve their own internal infrastructure and the like is already a giant step forward.
Yeah, very, very interesting. To your point, these companies are choosing more control over composability. I'd imagine if I was in their boardroom, they're talking about their own network effects versus what they stand to gain from tapping into perhaps like Ethereum or another public blockchain's network effects. I'm curious as it relates to Ondo and what you guys are doing in the RWA markets. You guys, congrats, Andy, tee up the confetti, just launched Ondo Global Markets, conveniently named
Confetti.
Ondo GM, which is a platform that will include a broker-dealer with accounts at traditional trading, clearing, and settlement venues, in addition to accepting client orders via API and web app. Also accept orders via smart contract calls and or token transfers. So this feels like, as you were just describing, kind of this bridge between the traditional world and the crypto native world. Maybe it exists on a public chain, or just generally in a Web3 world. Tell us a little bit more about why Ondo GM, Ondo Global Markets, and how you anticipate the market will react to adopting Ondo Global Markets.
100%. Yeah. We're very excited to launch it. It is our platform to launch and essentially tokenize any publicly listed stock and ETF that trades 24/5. It's going live with 100 or so assets, give or take, but over time we'll scale this to 1,000 plus assets. The way to think about the platform truly is that it is, in a way, a connectivity between the on-chain world and the TradFi world, where all of the liquidity for these stocks and the like sits, right? There have been tokenized stocks in the past. We've all seen, the Kraken X stocks launch. We've seen the Robinhood announcements and the like, but none of these platforms right now truly fulfills its promise, we would argue, in part because take the other products that are out there in a permissionless like format like X stocks. The problem with that model is that you've segmented liquidity on chain and off chain, right? There's no easy connectivity between the two. So you're trading on chain in these liquidity venues, but once liquidity dries up, these prices start to diverge from the underlying. So as an investor, if I'm buying Tesla stock on chain, I would love to know that the price I'm getting is the same thing as what I would get in the TradFi environment in the NASDAQ, New York Stock Exchange, and the like, right? You want to make sure that there is parity between the two. But the way these systems currently have been architected, that liquidity bridge does not exist, right? That's why you get these stocks that start to depeg. It's very similar to what a stablecoin can do. If there is an instant minting of USDC or USDT, you're starting to see environments where these things depeg, and you need that instant liquidity, instant minting and burning to bring it back down to $1 or bring it back up to $1. And you see the same thing with stocks. So our platform truly is the first time where our assets are issued in a stablecoin-like format, where there is instant minting and burning of these assets, so that what you buy on chain can be bought at the same liquidity and the same price as is available in a normal brokerage account.
Introducing Extended exclusively on Starknet, a next-gen perps trading platform live today. With 50 plus trading pairs from crypto to TradFi, you get the best experience on chain today. Deposit in the community vault for attractive returns and engage in a fully unified experience for spot trading, lending, and perps trading. Exclusively live at extended.app on Starknet today.
And so is the right way to think about this almost like a tokenized wrapper? If you think of something like, a stable coin probably fits this bill, but also something like wrapped Bitcoin. And imagine wrapped Bitcoin is available for redemptions, right? I can take my wrapped Bitcoin, I can send it into the smart contract, and that smart contract will deliver me 1 Bitcoin on the Bitcoin chain. Similarly, you guys have a broker dealer as part of Ondo Global Markets. And so if I send my tokenized Tesla stock into the Ondo Global Markets broker dealer, it'll burn the tokenized version and it'll release this real, legitimate Tesla equity into my brokerage account.
Well, almost. You can send us your tokenized Tesla and you will get the value of the Tesla share back in stablecoin instantly. The reason why it's not exactly how you describe with, you get your Tesla in your brokerage account is transferring stocks between brokerage accounts is incredibly difficult, right? You would have to wait days and days and days. So what you can do though is essentially buy a token on chain that represents the same economic exposure as the Tesla stock, where dividends are reinvested after withholding the appropriate taxes. And essentially where you get the exact same economic exposure as if you were holding the Tesla stock in your brokerage account. If you at any point want to redeem said token back into stable coins, you can do that 24/5 in size.
I'm curious, what type of clientele do you expect the demand for this product to come from? Or like when you guys were scoping this out as something to really push forward as part of the Ondo roadmap, like what is the market segment of the world that you're like, this product is definitely for these people and this is why? I'm curious, is it like people like us who are like, pretty native on chain? Is it more people that are like crypto curious? Is it larger investors, institutions? Like, who is the market segment that you anticipate to, soak up a lot of this, of the demand side of this product?
Yeah, we expect there to be quite a large retail audience, quite frankly, that historically, globally, has really struggled for access into US capital markets, right? If you
Got it.
look at, there's a lot of talk right now about stablecoin and it being a better mousetrap to get access to the US dollar, which we would agree with. The same thing is going to be the case for tokenized stocks and ETFs. It's a much easier way for a global audience to get access to US capital markets. And people fundamentally underestimate how large that population is and how large that untapped demand really is. Like brokerage outside the US, there's a lot of minimum balances you need to hold. You
Yeah.
get absolutely ripped off on the fees. You may not even have the products available in your brokerage platform that you want. You can't buy them 24/5. There's a lot of limitations right now for global investing. Whereas at the same time, you've got 400, 500 million people who have a crypto exchange account, a crypto brokerage account, essentially, that are willing and wanting to hold crypto, but that would love to get access to US stocks in a much more straightforward way. So we fundamentally believe that the same audience that has figured out that a stablecoin is a nice way to get access to the US dollar, at some point will figure out that tokenized stocks and ETFs are a very nice way to get access to US capital markets. But even for a US audience, quite frankly, because I get this question a lot. Okay, I'm in
Mm.
the US, I already have a brokerage account. Like,
Yeah.
why care? Right.
Yeah.
Um, but even there, I have multiple brokerage accounts. I can compare and contrast the two. Some brokerage accounts give me 24/5 trading, which is really nice. But then if I want to take margin on that platform, I can only do it to invest more. I can't actually take it off platform into my bank account if I ever need a mortgage or whatever, right? Other brokerage accounts do offer that, but they don't have 24/5 trading, or the rate I get on my margin is absurdly high. I would love to just have my stocks in tokenized form, move them between platforms, even maybe have one investment account where I have both of my crypto and my stocks in
Yes.
one place so I can get
Yes.
margin on both at the same time. And if I don't like the margin in that particular platform, I'll go shop it around on DeFi or wherever the hell I want, right?
Yep.
It's almost like what a stablecoin did for your bank account. I think most people would agree a stablecoin is actually a better mousetrap than a checkings account because you can send it wherever you want 24/7 and you can use it in DeFi. Same thing for tokenized stocks and ETFs. And I would argue it's even a bigger leap forward because at least with a bank account, I could easily send money to you or wherever else. With a brokerage account, I mean, you can transfer stocks between your accounts, but it is not an easy process.
Yeah, as you mentioned. Yeah, I think there's like one interface for, I think that's where we're going, right? I think that's like what the race is for Robinhood, for all these different places, is like one interface, your entire financial assets that are like basically like let's just call it like your digital assets, which is basically everything that isn't real estate, land, physical metals, et cetera, commodities, all in one place. And one part of this that I think is that I've grown a thesis on and that I've seen slowly play out is that I think private credit is one of the dark horses of the RWA market that is like set to really, if you look at like the at the pie chart on RWA.xyz, out of the 250, or sorry, it's a significant number. I don't want to butcher it. It's a very small slice of the pie, probably less than 4 or 5% right now. My thesis is that that's going to grow to like 10 to 15% of the RWA market in the coming years. I'm curious, like, do you agree with that? Do you think that's right or wrong? And then is Ondo positioned to expand into private credit markets or into other kind of adjacent RWA markets, or pretty much just focus on the stable coins and equities side?
Yeah, it's a great question because I do get it a lot, and it's almost a
Okay.
fundamental question of like which asset classes does it make sense to tokenize in the
Right.
first place,
Yeah.
right? We've always taken the view that you tokenize things for two reasons. Number one is globally, people want access to the product and they struggle to get it. So putting it on crypto rails is a better way to facilitate the distribution and access. That's one. And then number two is people want to use the asset on chain as a form of collateral. And collateral can mean that you stake it, you use it for margin, you can do a wide variety of things with it, right? But for both of those things to be true, typically people need to have some semblance of pricing transparency. People want to be able to understand what is something worth. That's where you get into trouble with stuff like tokenized real estate, tokenized PE funds. Quite frankly, even some of these tokenized private company investments, you just don't have the same investor disclosures. So
You mean like
how
if you
is
hold like the open AI X
OpenAI,
stock thing?
SpaceX, yeah,
Yeah,
all of
yeah,
these
yeah,
things, how are you going to value it? Because the
yeah.
disclosures requirements are not the same. If you go to public markets, any public company has a ton of public disclosure requirements. They do quarterly reports. It's quite easy to at least form a perspective on what these things are worth, and you have very deep and liquid markets.
Yeah.
So that makes it a good access play because people can look at what is really the price of this thing, and if what I'm buying is the same price as the underlying, and it's good use as collateral because if people ever need to liquidate it, there's a very deep and liquid market. So that's why we focused on treasuries, public stocks, ETFs. To go back to your question around private credit, the nice thing about private credit is it moves you up on the yield curve, right? But you do run into the issue at times of what is the underlying, how much is this thing worth, how do I value it? Now, the good thing is with some private credit vehicles, they're also wrapped in a public wrapper, so you can buy ETFs that essentially are, private credit ETFs, and we can put those on chain. But we're not going to be the tokenization company that goes out and tokenizes these esoteric private credit
Right.
products or the real estate and the like. People have tried that. I hope someone figures it out, but we just don't think it's a good use case.
Yeah. So basically in markets where there's not like a very liquid, tradable and clear public value that is agreed upon by the market, it's much more difficult to tokenize those things. And that is going to require a different mechanism than, what is currently present in the market today.
Well said.
Yeah. Got it. Cool. Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins at USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol.
Earlier, we were talking about using some of these assets as collateral rather than selling it for liquidity. And I'm curious, as you are bringing more and more of these tokenized stocks on chain, you mentioned distribution and access is one of the key differentiators, value propositions of these on-chain equities or tokenized equities. Are you working on sort of the bridges from kind of the native chain to some of these other chains where DeFi exists? Are you working on some of those integrations? For instance, I can imagine a tokenized Tesla on Aave and borrowing against it on Aave. Or are you building out some of these solutions and these DeFi protocols yourself? Where is sort of the next jump here from a product perspective?
Yeah, I think it's a great question because I think DeFi is amazing. It is one of the key reasons why you put an asset on chain. I also think that DeFi is not quite built to support 1,000 different stocks and ETFs all of a sudden.
That'd be
It's
chaos.
not, yeah, it's pure chaos right there. Now, so we launched our Ondo Global Markets platform on mainnet Ethereum. We'll go to Solana BNB chain pretty soon. We'll go to Ondo chain once it launches pretty soon too. And that is really an access play because we want to go where the users are. Now, obviously, public, mainnet Ethereum has a lot of users. Solana BNB chain, there's a lot of users. I think people are gonna really welcome the fact that they can get access to these assets, and I'm pretty positive that the DeFi ecosystems on these various chains will support these assets in a limited way, right? Because I don't think Aave right now is going to all of a sudden deploy 1,000 different markets for these stocks and ETFs. it's not that it doesn't scale. Like normally in a brokerage account, you can have 1,000 different stocks and ETFs. It'll just show you what your margin balance availability is, and you get it in your account, right? Current DeFi isn't really set up for that. So that's part of the vision for the Ondo chain, quite frankly, is to build out an ecosystem, a DeFi ecosystem that really is tailored towards these public stocks, ETFs, treasuries, all in ones, so that we can really build brokerage on chain in a better way. But the current DeFi protocols may not necessarily be super well set up to do that at scale.
Yeah. 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 I think maybe at best you can have like a Mag 7 type of selection on something like an Aave, or even just like an index. I don't, yeah, individual stocks, as you say, like even on Aave today, or most, suitable lending markets, there's a selection of, 10 to 20 crypto assets that are deemed, reasonable to borrow against. Right. And so
Yeah.
to extend that to equities is a whole nother kind of level. Kind of on a tangential note here, Eric Trump slowly becoming a main character in crypto Twitter somehow, dunking on people for calling for ETH to go lower, pumping Bitcoin, celebrating shorts getting blown out, all sorts of stuff. I saw he was present at the Ondo Summit last year, or maybe it was earlier this year in New York City. Also recently saw him on an interview talking about how banks are basically losing, like that the current setup with banks is failing, that they can't process transactions on the weekend, all these types of things. I'm just curious, like in your interactions with with the World Liberty Finance people, Eric Trump himself, like what has been their driving force, or what has been their like what is that interaction like,
Right.
speaking with them? Just like generally curious what you can share your experiences, and feel free to share whatever you feel is relevant.
Yeah, I mean, they've become quite public in why it is that they're building what they're building, which in part is because obviously the Trump family experience with getting debanked and the current system, quite frankly, not really being in service of everyone and not operating 24/7. I think when we had them over at the Ondo Summit already back then, which was in February, that vision was very clear, and that is why they're building what they're building. Um, so it helps quite a bit if someone with that public stature, etc., is spreading that narrative, which I think is true, and as to why Ethereum in the first place, why DeFi in the first place. If the president's son has been debanked and is publicly speaking about it and is used and has that as the narrative as to why this technology is relevant in the first place, that's pretty powerful. I would also add that in my interactions with him and the person itself, he took the time to meet a lot of people within Ondo. I always find that quite impressive when someone truly takes the time to just meet everyone and say hi to everyone. So honestly, I can't have nothing bad to say.
Beautiful. Ian, we appreciate your time and joining us today. Look forward to seeing Ondo Chain roll out, and look forward to just the broader development here. It just feels like this space is the space of this kind of iteration of crypto today. Narratives come and go, but it does feel like this one, with regards to RWA's tokenization, is only really at the beginning stages, which feels crazy because crypto's been around for so long, and it's like, wow, like this was the obvious thing all
Finally.
along. Like we tried so much other stuff, but like, why didn't we just try this?
Well,
Yeah.
I'll give you a fun fact. I used to manage digital assets within McKinsey, the big consultancy, and the first project I did for a TradFi was in 2016, and it was about tokenization. So already back then, it was what can we do with this technology? Obviously, since then, not it hasn't really played out as fast as what a lot of people thought. I do think this time is different, in part because you have a lot of stablecoin liquidity out there. On-chain adoption is real. The whole concept of tokenization to facilitate access to an interesting asset for a global audience. DeFi exists now, it didn't exist back then. So I think the time really is now to start moving all of this stuff on chain. The adoption will probably take slightly longer than what we think, but I think the primitives truly are getting built right now.
There certainly is lots of momentum. And you guys are pushing the space and RWA space forward as a whole. So thank you for that. Keep up the good work. Ian, thank you so much for coming on. And
Appreciate
we'll
it.
see you next time.
Yeah,
Sounds
cheers,
great.
Ian. Thanks,
Thanks
man.
for having me. Bye.
Speak soon.
Thanks.
Congrats on Ondo.